Well, all of this discussion plays a role in what happens over at Union Pacific. The U.S. railroad operator reported results for the fourth quarter, which showed a lower than expected quarterly profit as freight volumes of agriculture and energy shipments fell. With us to discuss this is Lance Fritz, Union Pacific's president and CEO and chairman. It's good to see you again, Lance, and there's a lot to dive into with these numbers. But let me give the headline, because in the earnings call, you talked about the phase one trade deal we signed with China. You said it removes it as a headwind. It is now a tailwind. And if it comes true, you said, it'll be a really nice tailwind for the next 3 years. What makes you confident that the Chinese will follow through on their promise to buy soybean, corn, and that fuel shipments will also go up, maybe even coal, for instance?
Yeah, so Adam, that phase one Chinese trade deal, that's the if part, which is follow through and enforcement. The good news in that deal, if you look at some of the detail, there is an effective, a relatively strong enforcement mechanism that, if utilized, hopefully can be effective. So that gives us a little bit more confidence in implementation and follow through. But the details in that deal, it increases the commitment by China to purchase from the United States almost double or more than double what they've been purchasing historically at the run rate in 2017. And it's good for agricultural products and a number of other segments that would be positive news stories for us. So we're not building a plan on the numbers that are in that phase one trade deal, but it does give us optimism that, as you noted, something that had been a headwind in terms of international trade, and specifically our dispute with China, is in the process of turning into a tailwind. So,
Lance, good to see you. Get a little more granular for us, if you are able to. Freight traffic last quarter down 11%. How much of that do you attribute to the trade war, and how much to other factors? What are those other factors? So that gives us an idea then potentially of how much you could see a rebound if the trade war affected items come back online.
Yeah, Julie, the moving parts of us being down 11% in the fourth quarter, coal is a part of that. Coal was down pretty dramatically on very low natural gas pricing predominantly. Frac sand was down dramatically. That's on local sand being a replacement for the sand that we historically provide, as well as a little less activity in the exploration of petroleum in the basins that we serve. And then there was just generally a little malaise across a few other commodities that trade is informing. Specifically, trade has an acute impact on agricultural products, and more specifically grain, soybeans, and to a lesser extent, corn and wheat off the West Coast. We were able to find a few outlets for our grain to alternatives off the Gulf Coast, and it just wasn't enough to overcome what China being out of the market represented. So that gives you a little bit more granularity on those items.
Let's jump into these numbers, because Wall Street is certainly, it's applauding what you've done for the last 3 years. On a Unified Plan 2020, it's fair to say it is working. Your operating ratios are below, at least in the last quarter, 60%, so that is to be applauded. But one of the ways you got there is the workforce has been reduced. I think it was in for last year, about 17%, with more reduction going forward. Have you kind of peaked on those kinds of efficiencies when you're looking at workforce at Unified Plan 2020?
Yeah, Adam, so the Unified Plan 2020 is a two-part story. Most critically, from my perspective, is the story about the service product, how much better it is, and the sustainable and reliable nature of that service product. That generates demand, or an opportunity to capture demand more efficiently. The efficiency story, as you point out, part of that is about doing less work and hence having fewer employees. There's more of that to come. I think the largest steps maybe have already occurred, but it's hard to say that. What we told our owners on the call this morning was we anticipate incremental productivity off of 2019. So part of a lower headcount in 2020 is a run rate that we're coming out of the fourth quarter, and part of it is we're going to extend that as we implement additional productivity saving or productivity enhancements.
And one of the things that's going to potentially allow you to do that is positive train control. The safety measure will be installed completely right by the end of this year. But I know the labor unions are worried about maybe shifting from 2 in a locomotive to 1 conductor. Where do you stand on that?
Yeah, actually, positive train control is fully implemented right now on Union Pacific. It was fully implemented in December last year. And it does set a foundation, a technology foundation, that with incremental investment, we can safely and confidently take the conductor in the cab of the locomotive and have that person be on the ground doing the work that still will remain about setting out and picking up cars, setting out and picking up power, and investigating a train if it goes by a detector on the side of the railroad that indicates the train needs to stop. Where we stand on that is we've indicated to our unions that that is a path we want to go down in the national round that just started up in 2020. And there's actually a lawsuit that is filed right now that is attempting to get our union, who represent the conductors in the cab of the locomotive, to the table, to get them to the table to negotiate on that item.
Lance, we have been covering the World Economic Forum in Davos, and I'm sure you've been monitoring it as well. One of the big topics of discussion, not just there, but more broadly, has been climate change, how to address it. A lot of companies talking more about how to address it. Obviously, fuel is a big part of what you guys have to pay attention to. How do you address climate change and perhaps how to make yourselves more efficient or less reliant when the main thing that you're moving around the country has to have some kind of fuel?
That's a great question, and I was paying attention to your commentary earlier this morning. So we are a solution for companies that are trying to find a way to reduce their carbon footprint. When we represent more of those companies' supply chains, we help them reduce their carbon footprint. We're 4 or 5 more fuel efficient, times more fuel efficient than the alternative trucks. And one of the ways that we try to take advantage of fuel efficiency ourselves is by driving the fuel efficiency of our own network. We did a good job of that in 2019. We improved our fuel efficiency by about 2% during the year. And that's about having our locomotives work more efficiently. Some part of it is technology added to the locomotive. Some part of it is technology and training for our team, our engineer who runs the trains so that they can use their locomotives more efficiently. And some part of it is building longer and more productive trains so that the fuel that we are consuming is consumed doing more work. We also experiment all the time with technologies like hybrid locomotives, fuel cell locomotives. So it's not clear to us when or if a big shift in fuel of the locomotive occurs, but we're going to keep working on that, and I anticipate that will occur in the coming decade or decades.
All right, Lance Fritz, the president and CEO from Union Pacific, thank you for being here on The Move.
Thank you.